Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Thursday, July the 8th, 2010. Well, a continuation of the trend to the downside. We have another candle making a lower high and a lower low, and that's for the past week. This market has been in a downtrend. As this trading has progressed throughout the week, we have red-bodied candles, but those red-bodied candles are becoming smaller and smaller. We can see here we had a very large extreme red body, then a very small one, a larger one, a slightly smaller, and again today a slightly smaller one. And each day the sellers are making less and less net bearish progress on the day between the open and the close. And that serves as a warning for the possible termination of this trend to the downside. We can see as well that as the market is making those lower lows, they're not really making a lot of progress below the previous low, and that tends to suggest that there may be a change of trend coming up. Also, the market is trading at the bottom of the cloud now, so we would expect that that would hold as an area of support for this market. So there is a very strong chance that the market may rally from here. Now, considering that the market is trading within the cloud, if the market does rally, it won't do it very efficiently. Anywhere within a cloud may act as an area of support or resistance. So to the upside from here, there should be very strong resistance, and this market could hold up anywhere within the cloud. The market, by trading within the cloud, gives us a neutral bias. If the market was trading above the cloud, we'd have a positive bias in the long-term time frame. Below the cloud, a negative bias. Trading within the cloud, we have a neutral bias. So we need to decide whether we want to take trade signals when the market's trading within a cloud. We also have the market trading down below the Kijun Sen, which is the pink line, and that tells us that the medium-term bias is bearish, and trading down below the Tenkan Sen. So the fast-term time frame is bearish as well. Now, interestingly, both of these indicators are starting to go flat. They're not quite flat yet, but that reflects the loss of momentum with this market failing to make any significant progress between the previous lows over the last 3 days. When the Kijun Sen turns flat, and it hasn't quite turned flat yet, but when it does, the price action tends to be attracted back towards there. So if we have a fairly bullish day tomorrow, then there is a strong chance that Kijun Sen will be flat, and a very strong likelihood that the market will continue rallying. It may not rally all the way up to the Kijun Sen because, as I said, there is some very strong resistance all the way up through the cloud here. So obviously the high of the current candle is very important for us over the next trading day or so. That's at roughly about 84, but also the low and the bottom of the cloud here around 83.60 roughly. 83.70. That's important for the market to continue the support that it's been offering over the last few days. To the downside, there's very, very strong support down below, so the market will need to be very bearish to get through quite a bit of that support and reach the target from the head and shoulders pattern that we had roughly about 81.4. So looking at the way that the market's been trading over the last few days, though, I'd say that the probability is that we may see some bullishness coming in, so the high of the current candle is quite important.